All righty. All right, today, December 23rd, about 10 to 8. 2 days, less than 2 days before Christmas. And the story of the day, at least in my opinion, is gold again. And it looks like overnight, it does look like we hit all-time record highs. And there's even a little blip here. Let's see, COMEX gold delivery, inventories breakdown, blah, blah, blah. World stocks mixed, yen, blah, blah, blah. Customer bought 22 iPhone 17s, gold coins, eggs worth over R's 20, what, I don't know, whatever the hell that means. So gold making all-time record highs, and Bitcoin kind of on the skids. The other story is silver. I don't know if it did or not. Let's take a look. Did it crack 70? I don't know if it did. Let's see. Did it crack 70? Yes, it did. 71.55. So I'm actually going to mark that. Just insane. Just insane. Silver is the new gold. You know, and I have a bit of an opinion on it. It's a bit of a conspiracy theory but, you know, here goes. I'm going to say it just as much. I think the goal here, and as crazy as it may sound, I think the goal here is to make gold and silver worth just as much as Bitcoin, making it almost like a de facto type of currency. And as crazy as that is, it does kind of appear that is it. I don't know. In my opinion, it does kind of appear that is the case. You know, and I can't really justify this move any other way. And it is proving to be a very strong store of value. But again, you know, the underlying issue is that when you're looking at futures and commodity markets, they're not real, right? So, you know, that's the other thing that's a little weird as well, right? Although, you know, gold, ultimately, you would believe that there's an underlying precious asset underneath, right, which there is. But in reality, the price of it technically is not real, right? Because it's priced in dollars. So anyway, whatever. So gold making all-time record highs again. Silver breaking over $70. I would have never expected it. Even to a lesser extent, we have copper still kind of making new highs as well. And that's pretty much the story, I think, of the day. Crude oil continues to kind of hold. I'm looking for another $2 or $3 out of this in my trade. I'm targeting around $60 or so. And that one seems to be working as well. Natural gas with a really nice big move last night. Looked like it was going to fall out of bed a bit yesterday, but it didn't. Kind of held up. And another decent move this morning, up 4.5%. Overall, the biggest mover of all the commodities right now is that natural gas. And as I mentioned yesterday, I do like it long, all the way up to about $4.60. I'm not looking for it to go back to $5 range, but $4.60 or so. And that's it. And then to looking at bonds, bonds continue to be a bit erratic, I think is the word. Sort of holding this short-term trend line. Not really, because this area here got breached in here. This area got breached. So that kind of takes that trend line, or at least that short-term trend line's significance, not really making it too worthy is what I should say. It does seem that bonds are going to get a lot of resistance up here at this 115 layer, 115.30 in the high area. And I would mark that up there as a pretty critical area for resistance. And that if you are a little bullish on bonds, which I am a little bullish on bonds, but seeing that I was bullish on bonds all last year, and I had a pretty decent bond position all last year, and it kind of blew up in my face. It was one of the bad positions in my portfolio last year. I was long TLT up the wazoo. I was also short some shorter stuff like IEF. And it all didn't work. Because I think I was in the camp, same as a lot of folks, where it was like, all right, they're going to be cutting interest rates. It looks, should be good for bonds, but no. Did not pan out. And I think we're still kind of in some of that right now. They're kind of in limbo. And although I want to be bullish on bonds, it's a very tough trade. Especially after getting burned last year. Because you look, and it has not been good. I mean, even in the short term here, we have this short term trend here, but, you got this here. This looks terrible. I mean, I'd actually bring this down here, and that's more of a... and this is not a good look. And then you actually start drilling out, and here's bonds. Right? I mean, it looks terrible. And we have just chopped in this area. Pretty badly. So that's kind of my take on bonds. I think if you are going to get, the spot that I'm looking at in getting long in bonds and what looks better than the long end of the curve is the shorter end of the curve, being the 10-year looks to me to be a much better, stronger, of late. Looks like a very, very strong place to possibly get long. So I'm going to start that off in here, and then we're going to go and look at a few things. Getting close to that 50K mark on the account, which is pretty cool. Took a bunch of stuff off yesterday, too. It was actually a good day. There was definitely some volatility collapse in a lot of things, so I took a lot of stuff off. So if we're looking at bonds, I'm going to look at the ZNs, which is a 10-year. Futures. It's already had a pretty decent run, though. You're looking from the chart, but it does here look in the short term that we are kind of chopping a little bit. Probably get rid of that because that's in the way. And that's the daily. The 1 hour kind of tells a little bit better picture. I kind of like bonds long here. Unfortunately, we're up, a few handles this morning. I don't like to do anything on a day when it's up, but Nonetheless, I'm going to look anyway. There's really not much going on, folks. It's dead. If I did do anything, now you're not doing anything volatility-wise, so don't do yourself a favor, and don't get into anything. Like, don't sell premium. It's just not. It's not going to work. I mean, this is actually a nice little trade here, the 112, 113, or even the 112, 112 and a half. Don't use really a lot of buying power. These, you got to remember, too, these do not move. They do not move very, very rapidly and very fast. So just be aware of that. You kind of have that. There's really not much else you can do. Perhaps maybe we do let's try a calendar. If we do a calendar, I don't know what it's going to do. It's going to do a Feb-Jan. And the Feb-Jan calendar, I would likely, if it's going to put me at 113, I would do the 113 and a half in January. I would make it a diagonal. And the reason I would make it a diagonal is that the delta is a little better. If I just do a full-blown calendar, the delta is kind of light. But if I do a full-blown, if I do a diagonal, the delta in it is a little better. And I would probably do something like that. So the 113, 114 diagonal. Yeah, I would probably do something like that, but I would not do it today. I would look for bonds to pull back here a little bit, if and when they do, if at all. And then if we look at the IEF, and look, these are not sexy trades, folks. Honestly, they are not. None of these are very sexy trades. In fact, they're probably, they are as sexless a marriage as you could possibly get. But, nonetheless, if you're looking to do something in here, you don't really have much flexibility if at all. The nice thing about the IEF is that it does have these 50-cent wides that you can slice and dice this pretty nicely and build yourself some nice little trades because it has the dollar wides or the 50-cent wides, dollar wides. Which is nice because it does, in my opinion, help. Why did this go to January 9? I'd rather build this myself. So I would actually go to February. I would do the 95 in February, and I would sell the January. Wow, there is like nothing there. You don't even need to sell. I would just buy the freaking 95. So just buy the 95. It's in the money. It's in February. You don't even need to do a spread, because if you do a spread, look, if you don't want to spend $190, then maybe sell a 98. Excuse me. Getting rid of the demons. You really don't need to. I mean, again, these are small. Yeah, I would just buy this. That's it. That's all you have. There's no volatility in here that you can really do anything with. And that is that in a heartbeat. So that's really the only choices you have with bonds. Now, I know there's a number of products. I know there's a number of products that you can trade that are like micros. I have never really traded them. I shouldn't say that. I believe I have traded them probably a couple of years ago. Let me take a look. There's actually some micros that are like interest rate ones, like you can see here, but like they have no. There's a bunch of interest rate ones here. I've never traded them, so I don't even know what they're all about. And I look here, and there's like no volume in them. I mean, this one's got 171. That's the 10-year. Here's the 5-year. That has 0. This is a 2-year. There's the 30-year. I don't even know if they're liquid or not. And I know they're available. And if I was going to do one, let me just take a look at this, because I don't know anything about these. I believe I've traded this one, the 30-year one. I have definitely traded that one before. This looks like this is still a December contract, though. Why this didn't roll, I don't know. And I don't know much about these, and I don't know how they roll, and I don't know. But this is the product. And it looks to me like they really haven't been around. Or at least this one hasn't. I don't know. I'm going to see if it's on, if I can pull it up on. So I don't even know what kind of product it is. I haven't really done much research on it. What's the symbol here? And it might be one of these things, /10YZ5. I have no idea what the hell that is. /10Y. Oh, here it is. Micro 10-year yield. It's a 10-year yield. 10-year yield futures. One's a F6, one's a YZ5. This is the continuous. I doubt. Okay, so it does roll soon. It's got to be rolling like this week. So it's definitely a product that does exist. It's a micro 10-year yield. So I would assume that. Oh, come on. Fucking Thinkorswim, you piece of crap. Piece of crap. Ten-year yield. It's no cash settlement. Okay. I always like to look at what the product is. This chart. Let's look at a chart here. I mean, so it does look like, you're trading the yield. So if you're trading the yield, you're going to do it, right? You're going to trade it the opposite of what you would want it to do, right? So if you want bonds to go up, you would short this, right? Which means yield would go down. And if you wanted bonds to go down, you would go long this, which is kind of weird. But hey, look, that's just what it is as a product. So this might not be a bad choice. Let me see if. So if you would short this, and the margin isn't terrible. Margin's only 330. That's not bad. That's not bad. So I might take a look at doing something in here, only because, like, look, 330 buying power. I think the buying power on a regular ZN is about 2,500. That's my spread. Let me see. I think it's like 2,500. Yeah, it's close. $2,000, which overall isn't bad either, really, for being long. But I'm actually going to take a look at that one It's the slash 10Y. Interesting. Interesting. I wonder if it actually comes up on... silver just hit new highs again. Went over 70. Wow. Wow. Just a powerhouse. Juggernaut. Absolute juggernaut. And there goes silver. Wow. That is incredible. So look for those 75.75s coming soon to a theater near you. Pretty amazing. I mean, I'm long some silver. I'm long SLV. That's how I'm playing it. I don't really trade silver futures because look, here's silver futures just to kind of change. You know, look, that's what's moving. Here's an SI, right? Here's silver futures. And I've never been one to trade the options in here either because they overall, look, silver's a big ass product. It's similar to natural gas in a way. It's a very, very big product. And if you were going to trade this, the margins are absolutely, look at this margin in here. It's 36 freaking thousand. 36,000 for an SI. Now I know there is a micro silver now. I'm not aware of the product as a whole. I don't tend to trade the micros outside of the indexes, right? So I'll trade a Russell micro. I'll trade a NASDAQ from time to time. I'll trade MES, and even I've done some gold and to a lesser extent crude oil micros. And I would say I would rule them as kind of like maybe the next tier, and they're okay. I don't think they've really come into the fold as big as the index micros. So I'm not familiar. Here's an SIL. I think this is the micro contract. And for a freaking micro contract, it's $7,000. I mean, so that's just insanity, right? So how much, but you know, a micro, because look, it's $36,000 versus 7, but still, that's the micro. That's insane. Where, you know, and just comparatively, here's the micro crude, and micro crude is about 1,000. And I think micro gold is about the same, if I'm not mistaken. Where's MGC? MGC, do you see it? There it is, MGC. I think that's about, no, that's actually 2,700. Well, that makes sense now. That makes sense because I know when it was back around, when it was trading around 2 and 3K, it was about 1,200. So it's 2,100. So it's not really that far off the reservation. Even still, a lot easier trade to trade that micro gold than it is to trade. And as, like I said, as far as the micro crude is okay as well. Not as liquid as like an MES, an MNQ, or an M2K. I will tell you this is that trading many of these micro contracts on something a little bit. Now, I know I'm talking about futures, and it's only because there's not really a hell of a lot going on out in the stock world, folks. To be honest, there's not. And but, you know, look, and I think I've said this before, and I'll say it again. And I'll just bring it up because I think it's worth it. Is that if you're really going to trade futures on the regular, you know, and I trade futures on Tasty Trade because I don't trade futures, but I also drink Dos Equis. I also trade, and I have a trading account with Amped Futures. Now, they're all pretty much the same, these futures brokers, but the beauty of these futures brokers, when you day trade, here is the day trade margin that you're required. So you don't need a big account, folks. And that's why I've repeatedly said on this broadcast that when you see these folks out there, grinding and grinding through these asinine combines, and they're paying $50 and $100 a clip. And, people are saying like, oh, well, it's not really their money. But, look, all that money that you spent trying to get those combines, I'm sure a lot of these folks have spent thousands. You only need $500, $600 in an account. I think you can open an account with them as low as $1,000. I think it might even be less. I don't know. And I only keep 1,000 in here. Like when my account gets up to 2,000 or 3,000 in here, I take it out because it's a futures account. I'm not earning any interest. It's not like a brokerage account, right, where you earn interest on your cash sitting idle. They don't offer you interest, so I don't want my money just sitting in there not gaining anything as well. So when my account is over, and I usually assess it every month, and at the end of the month, if I have over 1,000 in there, I take it out. And I don't care. That's just how I roll with it. But if you look at these margins, these day trades, now here's the maintenance, right? And that's why they're so high at Tasty Trade, because they're not giving you day traders margin on those. They're giving you actual maintenance requirements. And then you look at these day trading margins, and that's why it's beneficial to trade through a futures broker, because of these day trade margins. And then if you're looking to, like, you're looking at these funded accounts, look, folks, the reason they're able to give you five contracts or $50,000 account, it's not a $50,000 account, folks. It's not. This is what they're basing it off. That's why you're not allowed to carry overnight at a prop firm. There's a lot of reasons you're not. If you notice, like, look at the rules in the prop firms. You can't carry overnight in 99% of them. Number one. Number two, they don't allow you to hold positions through big major news, because what ultimately happens underneath is that margin requirements are usually changed. And the reason I know that is because when I'm at Amped, they send out notifications usually a day before, like an interest rate decision or some big economic number. They will say margins, day trade margins have increased or will increase for the overnight, because they know that with the way the market moves, and they're trying to force people to say, hey, look, you may not want to hold on through this, because margins are going to increase, and if you don't have the money, you're going to get forced liquidated. But anyway, that's why the rules are the way they are. And it's not because of the prop firm. It's because of how they're allocating the money in the account. And they don't want to take on the maintenance requirement. They're actually cheating the maintenance requirement. That's why they're able to offer you these big, or these so-called big accounts, when they're really not that size. They're really basing it off this day trade margin, like even doing a big S&P or even a big NASDAQ. They're only required to hold $1,000 for the day trade. That's why at 15 minutes before, a lot of these prop firms will send out notices. Oh, the market's closing. You have to close your positions. And they basically tell you, look, we're going to force close you at 4. Like, look, the futures markets close at like, what, 4:10 or 4:15? They'll force close you and tell you, we're going to force close your positions if you have anything open after 4 o'clock. And this is why. It's because they're not giving you this maintenance requirement on your 5 contract account, because if they did, they would have to, that account would have to have over $100,000 in it, close to $200,000 on some of these accounts. But no, it's day trading, so they only have to have maybe 6K at the most. No skin off their back. That's if indeed it is a real account, if it's a real funded account. I mean, how many of these accounts, majority of them, I would say 90, 95% of these so-called prop trader firm accounts are sim. They're all sim. And you look at it, anyway, that's enough of that, but you look at the business model overall, and it's worth it for them to keep it a sim account. It's beneficial to them because they know that there's enough morons in the pipeline paying for those combines to fund that. If they actually have to do and fund a payout, it's no skin off their ass. Because it's cheaper for them to just pay it out of their own pocket than to have that money be in an actual real account where it becomes a true loss if your account blows up. So anyway, I guess the moral of the story is that, folks, you don't need to go chase these funded accounts. All you do need is about $1,000 tops. And I would even go as far as saying you only need like 500 to day trade, and then just day trade one contract. And trade like one contract. Because like I said, I have a futures account and I don't keep a lot of money in there. And the most I trade in there on any given day, since it's $50, because most of the time I'll trade the ES or the Russell micros. And I could trade 3 of those and it's only $140. $120 for the Russell and $150 for the MES. And that's it. And that's all I have to have in my account. And I just build it up. And look, sometimes it doesn't. Sometimes I don't build it up. Sometimes I do. But yeah, just take that under advisement that these prop firms, folks. And look, I'm not trying to say, look, if you think you have a strategy where you can maybe go through, I would say at the most only go through like maybe 2 to 3 iterations of prop firm qualification. And if you don't make it, don't chase the ghost. Go away for a few months and then maybe come back and try it again. But if you have a strategy that you think you can pass in a couple of iterations, yeah, by all means, go ahead and get their money and do it. But your goal should be with these prop firms is that within the first 6 months, if you're able to take payouts, take payout after payout after payout, and your objective should be to get the fuck away from that place as fast as possible and have it be your own money. Because the longer you stay with those firms, the more apt you are to become a shill for them. Because what will ultimately happen is they'll see that, look, you've had plenty of funded accounts. Then maybe you have like a Discord or something like that, and you have a following. And what they're going to do is then they're going to start baiting you and saying, you know what, we'll give you a free combine. Come over to our place and maybe, start doing part of our broadcast every day. And it's a fucking scam, folks. It really is. I can't even watch them anymore. I used to watch them all the different places, and now I can't even look at it the same because it's so filthy and disgusting what goes on. But again, if you could be one on the other side of it who takes advantage of the system, and meaning that, look, go get your payouts. Don't become a shill for that firm. Take your payouts and then get the fuck out of there, and then keep whatever it is that you had. So if you had like a Discord and you have people following you and you were able to get funded and you could show people how to get funded, stay away from that place as far as possible and stay on your own. Don't get sucked in. Anyway, that's really it. We'll look at a few stocks. Everything kind of pumped yesterday across the board. There was not very much if at all. Micron, kind of the story, I think, of the day as far as like the big tech stocks really moving. Yesterday was up 4%, new highs. It's pretty known out there now that they're supplying. I think there was some news that they're literally supplying like some massive amount of the amount of memory that they're supplying underlying tech industry is just insane. I think if you read one of these articles that came out yesterday, it's kind of nuts. They're literally supplying like over 50% of the memory to basically the top 30 technology firms in general. It's crazy, absolutely crazy. Even the likes of an Oracle, Schmoracle, even had a big day. Look, this has got a long way to go, but even that yesterday was given some love there. And then the other story, at least to me, was Tesla. I don't think it quite hit. I think it may have just like cracked 500. Did it crack 500? I don't even think it did. I don't think it did. I think it got really close. Yeah, the highs were 496. 498.83. 498.83. 498.83. So could not quite crack 500. It did rally pretty hard yesterday, but it also backed off quite a bit as well. And then when you do look at Tesla here, you're still seeing that activity out here on that 500 strike. Let's take a look at open interest today, 46K. So continues to build out there. Tons and tons of option volume. I think it was actually the leader again yesterday as far as options are concerned. So yeah, yet another stellar day for that, and they just keep pumping that up. I think on the other side of the coin, Netflix continues to struggle. Now, there was some news yesterday that kind of circled around with Netflix that I think Paramount revised Paramount amended their bid. So, what's actually going on with that? I don't know. I think there's more to what's going on with Netflix than just that. I think there's a bit of, and I hate to use the word, but I'll use it anyway. I think there's a bit of fatigue with Netflix because they don't really have an enormous amount of shows and whatnot in the pipeline that are kind of trending or hitting the tape where like, oh, wow, they have this, that, and the other thing. They kind of have that going for them. And then they're spending all this money on these new facilities. And they're kind of in a doldrum here where they're kind of caught, I think, sacrificing their stock price for growth here because they need to spend some money and they need to get some new stuff in the pipeline for it to grow. And so I think that's really what's going on with Netflix. And as I mentioned, I'm in a few bearish positions in Netflix, targeting about $90. I think it goes lower than that. I mean, I wouldn't be surprised if it doesn't come back down in here. I think back in here, though, I think if it does get down, and I'm using $85. I think once it kind of breaks this $85 range, I think you're in a good spot to start building a long position in there. And I wouldn't do it before. However, when I do look at this chart here, this, for me being bearish on it short term and thinking it's going to come back down here, nothing ever happens exactly how you plan it. And from the looks of this, I'm expecting this to kind of break this 90. I have 92.07 marked. And the reason I have that marked is that we need to break that in order for my bearish kind of skew to still be intact. And unless we do, we're likely going to chop here for a while, and we may even get a reversal. If that's the case, right? We could possibly get a reversal and get something like that, and then that would take my bearish stance off the shelf, so to speak. So I'm continuing to watch it. It looks weak again today. I think it's off a little bit. It's not like, so I am watching that. And, although I am still bearish, I'm also realistic where, look, it may not even get down to here or not, but if it does, but I have no problem reversing my positions and getting bullish again if and when that happens, because I do think it is going to turn around. I just don't think it's going to be something that happens very fast. What else? Let's look at some of the stuff in the AI space. I took off a few things. I'm in this Hut 8. I took on that Hut 8 Strangle. I'll take a look at that one. This space had a very, very good day yesterday. You had Hut 8 that was up nearly 14%. We have this one marked out, right? Broke through here. So now this becomes, this is now going to become a support. And we have this down here. So this line's now going to become support, and then we're going to be looking at most likely this area here at a 54. Then we have 57, and then probably this high here at 58.40 for possibly a target if you're long. But this really turned around on a dime. This stock looks really strong right now. And this is what it looks like on the 4-hour when we kind of chunk back a little bit. It did kind of go through a pretty heavy gyration. But we will look for this spot to be support now, which is about, what does that turn out to be? 47.32. So look at that now for being support if you're long. But as well, many of the others in this space, Planet Labs, Iron. This one looks a little bit more troubling than the others. This still looks like it needs to, this needs to get up above this spot and hold it, which is about, $41 or so, for it to be a true trend reversal. Because you could see here, here's a high, here's a lower high, right? And that's not usually good. So anyway, and then NBIS also having a good day. This one as well. A lot of these look the same, folks. I mean, they looked like they had a good day, but did yesterday's price action signify a true reversal? I don't believe so. I think the jury is still out on that. I think the strongest one of all, and look, this is my first time looking at these charts this morning, because usually I'm pretty good. This, I think, looks the best so far of what we've seen. We kind of have a real nice ascending triangle forming there, where this could be our breakout point. And as long as this thing kind of holds this, let's look. I don't think there's a lot of volatility in CCJ. When we looked at it last time, I think it was pretty light. Yeah, 18 is not going to cut it. for a option sell, I would likely go out to let's look at the calendar. Calendar spread would probably be the way to go in here. Let's take a look at the calendar. I gotta build these. I don't know why it does the weeklies. I hate the weeklies. I hate them. Maybe that's why. There we go. Here's a January, and likely if I'm going to do the 95, I'm going to do the 95 100. And again, liquid strike, 436. This is something I would consider. I don't like the fact that 95 is out of the money. I would stick to an in the money. Let's go to February. I would stick to an in the money. I would go to whoa, what happened? Did that just disappear? Why did it do that? It just changed expiries. I would do the 90-95. I would do the 90-95. I would prefer to be in the money and have a little bit of intrinsic value here. You're getting about 16 deltas. I actually like this trade. And there's CCJ. And again, this trade is going to be trying to play on this ascending pattern here. Is this an ascending triangle? Well, whatever it is. I don't know, whatever it is. Whatever it is, I know this is a pattern of some kind. My brain's just farting. I know there's people watching and saying, oh, that's it. Whatever it is. I know what it is. I've drew it up for a reason because I know what it is. I just can't think what it is on top of my head. Anyway, as long as this pattern continues to hold here, right, and we continue to have volume underneath, we have this area that is going to be considered a little bit of resistance. And if premise here is that if we get above this, if we get up and above this, it will break. It should be a breakout, and it should break out up over that. The other thing is there's a gap to fill between 98 and 100. So, that's also a good sign. So anyway, we'll just keep an eye on that one. But I do like that. I do like that here at that price. So there you have it. And then some of these others, they all kind of look the same. If you notice, all these stocks all look very similar. They're all kind of trading together, which is also interesting because I'm actually really happy that I've managed to put these in the same group. I'm calling them AI. I know they're not all related to AI. This is just how I decided to group them, folks. I'm a little I'm stupid, and I just like to just make things as simple as possible. So these are not just AI, they're AI-like, or I should say AI sensitive. Let's put it that way. And if you look, they're all kind of trading the same way, which is really cool. So I'm really glad that I've managed to start putting them in this same, because they all seem to be trading together, except for HUD 8. It seems like the only one, and HUD 8 and CCJ seem like the only two that are kind of bucking the trend a little bit. And so let's go back and look. And I kind of like that one. I don't have anything in CCJ either. So I'm likely going to put that one on today. But let's take a look at my HUD 8 trade, because I actually rolled it. Where'd it go? Where'd it go? There it is. My HUD 8 trade, I originally did the 35.60. I was in the 35.60, and I rolled it yesterday because HUD 8, and you can see I'm actually down a bit on it, but HUD 8 was up like $6 yesterday. Right? It was up $6. So I had rolled that put up to the 40. So I'm now up here. And I know there's people that say, well, why? Well, you do that, folks, because look, if it's going to go against you, you want to try and get ahead of it a little bit. I didn't want to be too aggressive. But now we're down to about here. Coordinates. The coordinates. All right, so now we're down to about here, and our upside here is still up and above this area here. So we can take this and go there, and we're still in this range. All right, that's why you do it. And so now what I would actually need in here to make this start turning profitable, I have 24 days left, would be for this to have a down day today, which is nice because it is down $49. It's down about $1, which is good, which is kind of what I wanted. Anyway, that's kind of what's going on there. So we're playing this range here is what we're doing. So we'll see what happens with that. And then outside of that, let's take a look at the tape. I don't see anything. And then let's look at Bitcoin. Bitcoin looks like absolute garbage. Garbage. It looks terrible. I'm not going to sugarcoat it. I highly recommend, if you are following along and you've managed to stay along this way, this far, put this trend line here, folks. This trend line from down here about in September. Let's see, October 20, September of 23, and put this trend line all the way up because it does seem that this is giving a pretty decent indication of where resistance is on this. And then I would highly recommend this line here at 94K because that also appears to be an area where they just cannot get this thing through. And at least for a perspective point of view and get a handle on things, I think those two lines should give you a pretty good idea of what needs to happen in Bitcoin for this thing to turn around the other way. And why I continue to stay bearish on Bitcoin is because it has failed to break out of here. It's failed to even touch on this previous trend line, the up trend line, and even give it a chance to be in a reversal. And it is just chopped and slopped. And in the short term, even gets shorter than that, it does appear to be getting weaker and weaker and weaker, even though these rallies, they just can't seem to hold it. All right, so that's it. That's all I got. Nothing really else going on. It's going to be probably a quiet day. We're going to be looking at that 10-year. We're going to be doing a trade in CCJ and maybe something in a 10-year. And that's about it. Really not much else going on. And so have a good one. And I will be back tomorrow.